I am staggered. I don't think Rachel Reeves is stupid. She may be cruel, but I don't think she's stupid. And if she did put this tax up to 39%, she'd be really stupid.
There are lots of difficult decisions that I had to make yesterday, or decisions that I didn't want to make. The previous government made a load of promises without putting any money behind them and put our economic stability and our financial stability at risk.
£1 billion. Overall public spending is what, something like £1,000 billion a year? It's £1 billion, and it would make an intense difference.
Here we go again. Rachel Reeves and her team are back, and this time they're serving up more bad news for the UK. The latest? She's planning on increasing the capital gains tax to a whopping 39%. That's right, 39%. If this plan goes through, it could result in massive job losses and an even worse exodus of millionaires from Britain. But let's break it down for you. Reports have surfaced that capital gains tax might rise to this crazy high level. And you know what? I'm shocked. I mean, I don't think Rachel Reeves is dumb. Okay, maybe she's a bit cruel, but definitely not dumb. Yet, if she pushes this tax to 39%, well, that's just downright reckless. Here's why. Sure, in the short term, it might bring in some extra cash for the government. But what happens next? Investment will crash, businesses will back off, and suddenly, the UK will be less attractive for people to invest in. It's like cutting off your nose to spite your face. So, what is capital gains tax? It's pretty simple. Say you earn a decent income, and you pay your fair share of income tax. Cool, then you save some of that money and get taxed on any interest you earn. And if you decide to invest in something, a friend's business, a rental property, whatever, guess what? When you make a profit and decide to sell it, you get hit with yet another tax. That's capital gains tax. Now, imagine if this tax jumps to 39%. People will stop selling, stop investing, and just sit on their assets because the incentive to sell or invest disappears. Just the other day, I was talking to a mate, Graham, who owns a house. He's made a bit of profit, and he was planning to sell. But when he heard about the possible 39% tax, he said, "No way. I'm not selling. Rachel Reeves, you won't be getting a penny from him. The higher the tax, the fewer people will sell. It's basic economics." This idea doesn't just apply to capital gains tax, it applies to taxes in general. It's all about balance. You can't just hike taxes sky high and expect it to work. It's like running a restaurant. Sure, you can jack up your prices and make more money for a little while, but over time, customers will disappear. You'll close up shop. It's about finding the sweet spot. And 39%? Yeah, that's definitely not the sweet spot. Across Europe, capital gains taxes sit somewhere around the mid to high 20% range. In the UK, it's around 20-28%, depending on the asset. Most people were expecting maybe a small increase, but nothing beyond 28%. But 39%? That's asking for trouble. And then, in typical Rachel Reeves fashion, she presents this tax hike as if it's some kind of magical solution. There's talk she might change the rules to boost investment, but that won't help with the immediate spending needs. We're talking about £47 billion in spending that has to be covered. Where's that money going to come from? You guessed it, taxes. Hence all the fevered speculation about capital gains tax and employer national insurance hikes. The government needs to rethink this. High taxes aren't going to solve the problem, they're going to make it worse. We're staring down the barrel of an economic disaster, and if they don't change course, it's not just the rich who'll suffer. It'll be all of us.